Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Thursday the 15th, halfway through September 2022. Pretty muted out there in future land this morning. Equity futures are mostly flat. Commodity futures are taking a leg back. Nat gas down 5%, but it was up like huge yesterday, so who knows what's exactly going on there. Sad gold below 1,700, no surprise there. That thing continues to not be able to get out its own way. We got Ray Dalio out there joining. I guess he's made these comments on Tuesday. I didn't see him till yesterday, but he's joined the 20% downside camp for stocks. If rates are going to go up to that 4.25 type of percent, which if you look at the 2-year, what was 3.85 this morning? We're not that far away. So 2 years been leading the way for the Fed thus far. So maybe that's not too far off in terms of where we're going to head. So I'm going to go into a little bit of a narrative going on out there that's kind of gaining some steam, and some things that I'm looking at in the marketplace that might back up this narrative. But as I do that, I want you to understand that I am explaining a narrative for the sake of doing that. I am cautious in terms of our exposures. We're very much net long. That's how we operate. That's who we are. But in terms of hedges and all that, we've got some on. We put more on yesterday. We put some more on Tuesday. We're going to let things breathe here a little bit, but if the market if it rebounds a touch, gets close to technical resistance points, we might put more on as well. So with all that being said, the other narrative gaining steam out there is the deflation narrative, and you've probably started to hear this. The idea in 12 months from now, we will have licked inflation, and it'll actually be in a deflationary type situation here in the United States. Jeff Gundlach mentioned this briefly, his belief when he back on was it Monday, Tuesday? I think it was Tuesday. Yeah, at Future Proof, that he thinks we'll be in a deflationary situation this time next year, and hence he's endorsing long treasuries, thinking that the Fed's going to have to reverse what they're doing, go back to lowering rates and all that. Apparently Musk has joined the camp as well, though I have not seen his comments. You have our friend Kathy Wood, who's talked about the deflationary effects of innovation and technology and what have you, which I don't think anyone disagrees with. That's not really the big debate here, and that's really not what's called. It's a different situation than what we have going on right now, in my opinion. But nevertheless, interesting to see that. I sent out a tweet yesterday while the market was down a decent amount, and it just could have been a temporary blip, but I thought it was curious. The groups that were outperforming, even more than energy, were expensive tech, not just the crappy companies and the ones with no chance of profitability and no chance of a real P&L and a real balance sheet. These are the companies that have a chance of all those things, in my opinion. So you're talking about Elastic, GitLab, HashiCorp, Snowflake, Zscaler, SentinelOne. These stocks are all up 2, 3, 4% yesterday. And this is one day after that horrible CPI print we got on Tuesday. And these names are coming back one day later. If we were to rewind the clock a little bit and look at the first half of this year, I don't think that would have been happening at all. These things would have been getting bludgeoned for days in a row, and not really asserting themselves. Some of these things, you look at like Elastic, which we own a tiny bit of, ESTC, that stock technically looks great. Now that could all change in a matter of days. This thing could break down and make just stampede towards lows. But this thing's looking great technically, and so are a number of other names. Just a point of curiosity. So now, it doesn't mean that you run out and buy these things by any stretch, but it does make one stop and think. What if the market is starting to believe that inflation will be contained and pull back rather quickly, which seems unlikely at this point, but nothing's impossible. This would also help explain why small caps continue to act relatively well. They're the early beneficiaries coming out of recession. So are we seeing early signs of relatively muted recession with inflation tamed in 23? Only time will tell, but the lesson should be listen to what the market's trying to tell you. This is an early observation that I will follow up on if it feels real, or I'll just spell it if it looks like pure fantasy and nonsense. I'm not acting on this myself. I'm just, trying to expel what I'm observing. So much of the market is really human behavior and lessons learned from that. So that's one of the things that we definitely pay attention to. That's all I got for today. Have a great day. Nothing real overly market moving out there today, unless you're long Adobe. And hey, if you're listening on LinkedIn, throw me a comment on this. See what your thoughts are. Very curious. Have an awesome day. Talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnell.capital.com.